Good afternoon. This is Alan Helfling from Comstock Investments. Wanted to come to you guys this afternoon to talk about the USDA supply and demand production report. Um, the numbers, the market reacted somewhat to the reports, but overall, um, it didn't really change any trends or anything like that. Um, so we will go into the report now. Go to screen share. There we go. Go there, go there. There we go. So obviously it's May 10th. Once again, I'm Alan Helfling, broker at Comstock Investments here. Um, and I'm going to get right into the report. Here's the soybean numbers. We got two different numbers. We started out with this year's carryover. You can see I got things highlighted here with a circle around it. Whoops. Um, Ending stocks, they actually decreased 10 million bushels. You can see where most of it came from. We lost 15 million from crushings, but they put 25 million onto exports, and that was a net total of 10 million bushels of usage, and that comes right off the ending stocks, right in here there. So you can see in April we were at 445, and now we're at 435. Now we bring that ending stocks into the new year, starting the getting stocks over here where my arrow is. You can see there's guesstimating production here, 48 bushels per acre on harvested of 88.6. Some will argue that maybe they're a little too low on numbers, but this is a starting point that we'll start with, and we'll just see how the growing season goes. It could be up from this number or down from this number. And obviously, we still don't know how many acres we're actually going to get planted anyway. But anyway, we come in with the beginning stocks, production of that number there. I won't read the numbers, but just go down the list here. They're keeping the crushings pretty close to last year, and they're actually increasing the exports 100 million bushels. And that is one of the reasons why the soybean market hung in there pretty good today. As you can see, they're projecting a 480 million bushel carryover. The average trade guess was a little bit stronger than that. We were over like 527 million, so that was friendly to the market, and that's why the beans really didn't get too ugly today. So we'll move over to the corn revision sheet here. Corn, however, you can see my circle here. Feed, seed, industrial use, they increased 25 million bushels. That's the only um, line item that they actually changed, and that directly comes off the ending stocks. So now we're 2.295 billion bushels of corn. And then you come into the next year's supply and demand table, using this year's estimated acres of 90 million. The yield is just shy of 171, and then our production is there. You can see that. Supply is down because of production being down. They're going to raise exports, actually lower exports a little bit from this previous year. But because of the lower acres, the lower yield, our carryover is planned to be dropped to 2.1 billion um, bushels of corn, and obviously that can change. But this is a starting point for the 2017-2018 carryover. We'll have to see how it comes out to play. All right, here's the wheat balance sheet. They pretty much left this carryover the same. They changed 5 million bushels here and there. You can see the different colors, red and green there, but they kept the stocks the same. So you bring that into the beginning stocks number, 1159, 1.159 billion. And as you can see now, this is where I've been a little friendly to the wheat market. I shouldn't say friendly, but I'm friendly to the fundamentals on new crop wheat. You can see acre harvested dropped dramatically here. The yield, they're who knows where the yield's going to come. We've had some problems out there in Kansas and Oklahoma area, but the rest of the nation is shaping up pretty good. So that's all debatable yet. But you go through the numbers here. The biggest drop is the production, and you can see we're going to drop the carryover to 914 million bushels, and we'll see how it all plans out here on the wheat also. All right, now we're going to go to the ending world stocks. As you can see, world soybean stocks last month they were 87.4, but the USDA has increased it to 90.1. That was a negative number, basically coming from our record production and South Americans' record production, and that was pretty well in the market, maybe a little bit more than what the average trade guess was, but that wasn't a shocker. Corn, once again, huge USDA crop, huge South American crop. They increased it a little bit from last month, but you can see from last year to this year, they've increased it quite a bit. Ending wheat stocks, we knew it was going to be big. They actually increased it some more. And that's what's keeping the wheat market down and in the corn market is just heavy old crop supply. Now here we go with the ending stocks for a year from now on world soybeans. Believe it or not, we're starting out with a bigger carryover than we did last year, but they're actually lowering world carryover for 2018. And this is what really surprised, I wouldn't say surprised the bean market, but the bean market liked the numbers and it brought support into the market. We're actually going to shrink carryover, which is a little bit of a surprise. But obviously, it hinges on USDA production or America, USA production this growing season and into South America next. So that number, who knows where we're going to end up. But that's the starting point for next year. And this is what really got the corn market friendly. The world carryover from corn, you can see last year we're at 223 estimated, and we're dropping it substantially, actually 28 million metric ton. The market probably thought we might drop it 13 to 15 million metric ton, but like I said, it came in quite a bit bigger than that. So it gave support to the corn market today. All right, turn the page. Now let's throw some charts now. This is a May soybean chart. As you can see, since the last USDA report, April 11th, where that red arrow is there, it just goes to show you that we're actually been in an uptrend. We're inside a channel here. You can see we go up a couple different times. We rally back, but we're making higher highs and higher lows. How long this will go on is anybody's guess, but until it proves itself to move out of the trend, this channel one way or the other. I think it's going to be very difficult to get up into this area here. Obviously, May beans are going to be going off the board here Friday. But if you look at the July chart or the November chart, we have this consolidation that we put in late part of March. And that's going to be really stiff resistance here. So we'll have to see how we pan out, but I'm still buying puts and selling calls. I just think that's the right thing to do. Some of the calls that we sold last week kind of ate us a little bit this week. We sold some 980s for 15 to 20 cents, but I still think they're good property. All right, now we're going to look into the May corn. You can see April 11th USDA report. We had a good day that day, just like today. We took a rally. We rallied into 3 more days. And we made our spring high we put in a couple days after that report. And then we sold off, just ebb and flow of the market. Can't really see much here. We've been whipsawed back and forth from my moving averages. I get buy and sell signals just about on every third or fourth day. I can see the trend lines here. We're backing ourselves into a wedge formation. We're about ready to break out of it. If we break out to the upside, the general rule is whatever the top side of the wedge is, and it's about a 30 cent, 35 cent wedge. So if we break out to the top side, we might be able to rally this market 30 cents. I personally don't see that. I do think July corn could get into the 380, maybe the 390 area, but it's going to take some type of hiccup in this year's production or something to get us going. But there is a potential to put a little bit more on this corn, but I'd be aggressive seller of old crop corn. We get this July corn much above 380. Okay, we'll go to the next chart. I believe it's the wheat chart. Yes, it is. You can see April 11th report. We didn't have much follow through on that report, and then we went down and made new contract lows. Very, very solid downtrend there. But then we ran out of sellers down there, and then we had the blizzard last Monday, Sunday, a week ago, and we popped up, and we didn't have much follow through, and now we've come back and filled this gap. It's hard to say, where we're going to go from here. Like I told you earlier, the new crop fundamental wheat, it's friendly, but in the USDA supply and demand report, the world carryover stocks in wheat actually are increasing, even with our production cutback here in the States. So we're going to need a hiccup either in the Ukraine, Black Sea area, or some other place that grows wheat to really get this wheat market up and going. I am friendly to the wheat market, but I'm afraid it's going to possibly take another year before we chew through these overburdensome supplies. All right, now we're going to look at a live cattle chart. This is a June. This is a little freebie here today. Let's go back. Whoops, let's go back one more. There we go. As you can see, we topped out, I believe that was last Friday. Let's see, today is Wednesday, Tuesday, Monday, Friday, Thursday. Last Thursday, we put the high in. It looks like the high is probably in. I haven't quite thrown the towel in on June cattle, and this is a June cattle chart. If the cash market stays strong, June will more than likely take out that high. But I'm afraid that the deferred contracts, your October, your December, your next February contracts, they may have seen their high for now. And if we would get any type of a correction in these deferred cattle futures, I would seriously look at buying some puts and maybe selling some calls. But buying puts is a good strategy to have. And here's we have I don't know if you follow us on our Reco page, but we got a position that we own rice. We bought rice down in the 948 area. There was some algorithms that were showing us we should be buying it. So we went ahead and bought some rice. And today we blew through some resistance area and some pausing action. And it looks like this rice market could take out the previous high here. So stay tuned on that for any more information on our rice trade. We also, not every day, but we make quite a few recommendations here and there. So if you have any questions, you can see the information there. Call the office. You can talk to any of the brokers. Once again, my name is Alan. I've been with Comstock now for a little over 6 years. And I just appreciate you watching the video. And if we can help you with any information, if you want to, pick our brains, don't be afraid to give us a call. Anyway, I hope you have the rest of a good day here, and hopefully you're out planning and getting that job done. So signing off for now. This is Alan, and have a good day. Bye.